Welcome to Saxo Bank's morning call on Friday, the 26th of April. We had an eventful day yesterday in terms of macro, also action taking place in currencies. But we don't have John Hardy today, so I'm here with Ole, so it will be predominantly an equity and commodities update for you as we go into that weekend. And earnings is hammering on. We have around 700 earnings, so it's almost 35% of all the companies that we track during the earnings season that report this week. So there's so much to talk about, and let's just dive right into it. So yesterday, from a macro perspective, the markets were seeing risk-off sentiment driven by a surprise shock in South Korea's first quarter GDP. As you can see here on the chart, it's the worst GDP print since that ugly print during the financial crisis. minus 0.3%, and I've put in some two comments. So the comments to the lower right is from Bank of Korea. They're saying the drop was predominantly driven by weak government spending, but then also business investments, which came from a downturn in the chip sector, and there were also some base effects. You can see the fourth quarter GDP, which is the bar before that, was actually surprisingly strong relatively to every other country. So on a quarter-on-quarter basis, the bar to reach was quite high for South Korea. And the second commentary I had that on the chart was from SK Hynix, which is the second largest chip maker in the world, South Korean company here. They're seeing clear signs that demand for chips are turning around, driven by China. So I think this South Korea GDP number could be a temporary softness. I don't know whether you saw big movements in the commodity market from this print.
No, not really, but the risk off is benefiting to a certain extent, something like gold, which has just been ticking a little bit higher, but oil is ticking a bit lower, but that's probably other reasons for that. We can take a look at that later.
Yeah, but coming to gold, it's also fighting the strong dollar.
It has been fighting the strong dollar, and as I mentioned yesterday in the update there, that it's actually doing relatively well because the dollar has been weakening or strengthening quite a bit recently. So we're holding above this 1275 level. So I'll be looking at if we have a weekly close above 1280. I think there's a few shorts that's been established recently that need to be covered. So look out for that weekly close.
All right, and I had a discussion with John Hardy yesterday because we've seen a major breakout on dollar against the Korean won, and I don't know whether he bought into it in terms of his trade signals, but I told him to fade it. I think it's a fake breakout, but so we have a little battle going on there. It's going to be interesting to see who wins that. In terms of Nasdaq, it is where the momentum is. As you can see here on the chart, it's the US technology sector that continues to power on this equity market. We are far above already the peaks from September last year. As you can see here, yesterday's session was sort of an ugly reversal of previous momentum. I think we'll bounce back. We had very strong earnings from Amazon. I think sentiment in general is still quite strong for technology earnings, despite we saw some weakness from Intel. So, but if we zoom in on Amazon, so what's the catch here? So they're announcing a global one-day free shipping. I think that was a major news that took the shares higher in aftermarket trading. As you can see here, I think it is very strong momentum over the past months. I think Amazon's share price will recoup the highs, and free cash flow generation up 217%. As Amazon Web Services, the cloud giant, saw its revenue grow by 45% year again. So a very strong growth. I've highlighted on the slide with the red marker the international segment. I mentioned that in the last quarterly earnings statement. It seems like revenue growth is really slowing down in their international markets. I wonder whether Amazon's position is really weakening to a frightening weak position in their international markets. It doesn't look very well to only be up 9%. So that's an interesting story to follow. But otherwise, it is the cloud business that drives Amazon. And before we talk about oil, I just want to mention that besides Amazon, we had the Intel report. Very disappointing, and they mentioned cloud business. They expect the first negative revenue print year-over-year for their cloud business, that they deliver chips to these cloud centers. And when you see Microsoft and Amazon Web Services and Google's cloud business growing by 40%, you wonder what's going on. And it's not demand for cloud business that is going down, it's Intel that is losing market share to companies like, for instance, NVIDIA. Data center revenue for NVIDIA has gone up tenfold in only 4 years. So it seems like it's more an Intel issue than a broader structural demand issue for computer chips in the data centers. Ole, enough equities for now. We will come back to some other equities in a few minutes, but let's talk about oil. and what's going on?
Just an update on what we did, what we saw yesterday, and what we talked about yesterday. Looking at the chart here, we can see we had a bit of a reversal yesterday, tied in, I suppose, with the logo is almost hiding it up there, but the bar was basically almost a replication of what we saw in the stock market with this weakness coming in. But there is a sense that we're adopting, or the market is adopting a wait and see approach. 74 level, if you look at Brent Crude, is more or less where we are this morning. It's where we bounced off now 4 days in a row. And if we start to break below that, then I think there is a move down to 72. Overall, bulls are firmly in control because the market is worried about supply over the coming months. But there is also some speculation that the US is probably unable or potentially unwilling to force Iranian exports down to zero because of the implication that would have for overall global oil prices and gasoline prices in the US. So I think as we approach the weekend, we have probably seen most of that move, and we're now adopting a wait and see, and that could see it just drift back down towards that 72 level.
And talking about oil, what's your take on? We had an internal email sent around by John Hardy yesterday about that before the Aramco bond offering, the EIA had an estimate of production estimate of 5.8 million barrels per day for the Gadwa oil field, and now they had to release updated figures for that bond offering, and it showed only 3. I don't know.
Yeah, it was almost 2 million lower.
Yeah. And, what's your take on that in terms of supply constraint, and maybe Saudi Arabia is not as big as we thought?
Well, the interesting thing is that we've seen Saudi Arabian production go to a record in October last year and then drop to a 4-year low in response to the oversupply that we saw towards the end of last year. And it really we need to they will be tested now if we need to see increased barrels from Saudi Arabia. If US is successful in bringing down export from Iran, obviously we need to get the barrels somewhere else. Saudi Arabia is the one that potentially can increase rapidly, but it does indicate that potentially over the coming years they may not be as big a force as you might have thought in terms of being the one that can supply the extra barrels in an emergency situation.
Whenever we need them. All right. Let's I think it was a couple of weeks ago, we talked about coffee and how it relates to Starbucks. As you can see on the chart, Starbucks has been this phenomenal growth story, at least in terms of their share price, almost doubled in a year's time, as you can see here. And a lot of it has been due to a good strategy, good growth in China, but especially low input cost. Starbucks do hedge a lot of their coffee purchases almost a year into the future. More than 50% of it is hedged on a continuous basis, so they don't get the effect immediately when the spot price goes down. But they just announced earnings yesterday, and the margins were really improved dramatically, and it's due to this supply chain cost boost, as they call it, which is a different way of saying that low coffee prices is very good for Starbucks profits. And what's going on in coffee?
It's indeed very good because no one, I think, has felt any lower price at Starbucks or any coffee shop recently. But if you look at the price of the actual underlying, you can see how that has been in a major decline. This is the long-term and the shorter-term view. Since 2011, the market has dropped from above $3 a pound down below 100, where we're currently struggling. And I'll just inserted the BRL, which is the Brazilian real, priced in dollars. It's a future, so basically it's showing the reverse of what you normally would see. And you can see there that the Brazilian real during the past 5 years has halved in value against the dollar. That's obviously also one of the part of the story. So ample supply, but also a weak Brazilian real is putting the price under pressure. So if you just zoom in on the short-term outlook, we saw that collapse below 90 cents recently, and now we come back up to the 95 level. Really, we need to break all the way back above 101 before we can start to see any type of short covering frenzy as we saw in October last year. But at least we had a firm rejection at the lower level earlier this week, or last week. So potentially it could show some signs of consolidation. But overall, the market is oversupplied. We need to see the dollar sharply weak against the real for that really to recover.
And the dollar is indeed very strong at the moment.
Yeah.
What's the best way of playing a coffee? Let's say you had a 1 to 2 year view. You wanted to make a contrarian bet. I mean, is it options or is it futures? How's the curve in the futures, coffee futures? I mean, is it expensive to roll it a long position?
That is exactly the big problem. If you are potentially looking for a long position in coffee, the forward curve is basically just killing you, because it's the price difference between today and a year out is 16%. Basically meaning that the price has to rally 16% before you even start to make money over the next year. So that's really why so far the movements we've seen when we have seen the market rally has primarily been due to short covering from these people, from funds, basically just like the VIX we talked about yesterday, just generating income from being short a market because of the curve structure. The same thing goes for coffee. So a technical or fundamental change needs to occur for this to for the market to recover. In the short term, primarily probably only a technical it could be the main driver.
All right, interesting. Then a big news yesterday in US equity markets was 3M. 3M is seen as this bellwether of industrial activity. They do the post-it notes, touchscreens, etc. As you can see here on the chart, it was the biggest miss against consensus estimates in more than 10 years, and they had the biggest intraday drop since 1987 on Black Monday. Very big shock for at least 3M. But interestingly enough, if you look in the earnings season data under the capital goods industry group, which is where you find 3M, 3M seems to be more than an outlier in terms of the big miss. So I wonder whether this is a signal of broad-based decline in industrial activity. I would definitely be hesitant to read too much into 3M's trouble. Just like Intel, I think it's more a specific company story, and maybe the wrong strategic decisions, because we don't see the same fatigue at United Technologies, Honeywell, etc., and other industrials in the capital goods industry group. Before we go to the calendar, Ole, you had an update on what goes on in the soft part of the commodity market. It doesn't really look very encouraging here.
No, we're about to run out of time, so just take a quick look at the two of the key grain markets, wheat and corn. That's just really, it's been a horrible couple of weeks here for those markets. We got the record short across the space, especially in corn, which is on the right, and you can see that the market has obviously responded to that continued sell-off we've seen. Just some glimmer of hope potentially in wheat, as you see on the left. The December wheat, we could potentially see a double bottom there, or being in the process of being created. If that's the case, then obviously that could attract some short covering in the market. But right now, again with the dollar strength that we've seen this week, these crops are really dependent on the export markets, and as the dollar goes up, the price has to go down in order to stay competitive with the products or with the wheat or corn from other regions. So again, the dollar needs to stabilize, but just keep an eye on wheat for next week. Potentially a little bit of encouraging signs there.
All right, let's go to the calendar to finish this morning call. The big news today at 12:30 GMT is obviously the US first quarter GDP preliminary first estimate on where we are. I think given what we saw from South Korea, I think the odds have got in favor of a downside surprise to the GDP figure. So very interesting to see. But as you know, GDP figures are a lagging macro indicator, so typically they don't move the market that much. Next week, as you can see, very, very busy calendar. I don't want to go through everything, but we do have BOE meeting, and we have the FOMC meeting, and we have that's on Wednesday and Thursday. And then we have the US change in non-farm payrolls for April on Friday. So a massive week next week, and I'm pretty sure that we'll take you through it all, and we will on Monday give you the guidance for what we think will happen in the markets and on the macro, and John Hardy will be back. So with that, we'll say thank you for watching and have a great weekend out there, and we'll be back on Monday. Thank you.